You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time, once again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are listening to this very program. Hopefully you're getting the full network feed. If not, make sure wherever you're listening to this, iTunes, even our website or our app or wherever you get this show, that to make sure you're getting the full kit and caboodle, all the shows. That's all a dozen plus shows. If you want to just listen to Vol Views, we won't hold it against you. That's certainly, we make that available for you too. But the full network is always there for your listening pleasure. And of course, for you hardcores out there, we also put it out live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, MIXLR. Grab it, set it and forget it, copy that link, commit it to memory, and then you're good to go for this show, for TWIFO later on today, for Option Block earlier in the week, or indeed for some of the other shows we do throughout the week that tend to end up live. Few surprises there all the time. Keep an eye on that. And of course, just follow us on Mixlr, probably the easiest place to be notified the second we go live with whatever we're doing over here on any given day. And of course, however you listen live after the fact, hit us up, questions, comments, insights, your views on the VIX futures term structure, whatever floats your boat, send it our way. And we get some fun ones. We'll make sure we discuss them here on the old show. Yes, we do, except for Russell. The rest of us all really like to hear from you guys. And joining me on the program today, the aforementioned guy who just doesn't want, can't be bothered to take your questions. So we'll do it for him. Mr. Russell Rhodes from CBOE. He's been off for a few weeks, so let's give him a little bit of a hard time, but he's back now. Mr. Rhodes, what is your title over there these days? You still man about town?
I'm still man about town. I moved offices. I will post a picture of my new man cave because I'm kind of in a cave. No more windows.
No more corner office?
Don't know what's going on out in the world. All I can do is concentrate on the markets now. No distraction.
I can no longer say you're beaming in from your spacious, nay, palatial corner office at the CBOE. I can't say that anymore.
No, I've got one with no windows, and I have ordered a bunch of green felt. I am creating my own jungle room, being the Memphian that I am.
Oh, wow. Well, they'll have to redo all of our all the voiceover I just ordered for Russell and his palatial corner office. Now we'll have to change it to Russell and his somewhat smaller hobbit hole / man cave. All right, and also joining us on the old program, a little bit of a callback to yesterday's Option Block, if you were listening. We also have someone who joined us on the Option Block yesterday. Hasn't been on Vol Views in a while. It's good to have him back. Mr. Andrew G., a.k.a. The Rock Lobster from OptionPit.com. Mr. G., welcome back to the show, sir.
It is good to be back. 3 minutes and you're into the Hobbit thing already. So not only is Tusa a Hobbit, but Russell lives in a Hobbit hole in the CBOE building. I find that
I'm
find that interesting.
I'm on this kick. I'm looking at my screen. I'm looking at my screen and I see the tweet for the show yesterday. It's right front and center, and it's got a big Hobbit picture on it. So it's already got it in my brain. So I blame that. It was not my fault at all.
Yes, I'll bet you Sebastian will be back next week because he's going to be flogging his book. So he will be back. I have high confidence in that. Actually, I will be in New York. So
a new book fighting for this proverbial edge. There is still edge to be found in the options market.
Is that Mark's book?
That is, yep.
It's Mark. I edited it. I haven't gotten paid yet. It's out.
I saw a picture of it. He posted it on Twitter. I read through some of the passages. It's pretty good. Oh. So you did a good job editing it.
And I haven't gotten paid yet. Oh.
So paid to Mark's fashion means you get like a case of Miller Lite when it comes out. So you'll be look forward. Oh, a 6-pack. You're right. A case is a little bit too rich. Look forward to your case or your 6-pack, I should say. They're talking about edge in the markets. Don't tell that to Goldman. They're not liking it these days. But we'll get to all that fun stuff because it's time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. It's, of course, the portion of the show where we break down what's moving, what's shaking, what caught our eye this week from a volatility trading and trending and activity and analysis perspective. Like I mentioned, we're recording this and streaming it live right around noon Central here on the Friday, the 3rd of November. We are in the afterglow, shall we say, of non-farms or perhaps lack thereof. I guess it depends really where you're looking in the old marketplace. S&P is just showing no interest at all in what non-farms had to say. It is almost literally unched on the day. The Dow pretty much following suit. The Q is moving, a lot of that on the strength of some tech names like Apple just continuing to rally ho. Apple up about 3% again today post earnings. So people liking what they saw out there. I guess they sold a few iPhones, perhaps, maybe sitting on. Let's go out on a limb and say they're sitting on $1 trillion in cash, and that's pretty much the story from them. Of course, all that green and the event risk getting sapped out and a little bit of weekend coming out combines for some downside on the old VIX cash, which I actually got to say I'm liking because it is pretty darn close to what I'm right now. I'm about 0.09 away. So that's pretty close to a bullseye in VIX land. Still, we got an hour. Anything could happen. I'm sitting at 9.65 in the crystal ball, and we're at 9.56 out there in the cash as we're recording this. So we shall see. We got about an hour, so we'll see. Anything could happen. Another email scandal could break with Hillary. Who knows? And vol could start moving again. But as of now, looking pretty good. We shall see. Some folks, I think, what was it? Tech Colesaw, who's listening, was saying it's a VIX countdown out there. It's just eroding. He's counting down till it goes below 9. I don't know if we're going to get there, but we're getting pretty, shall we say, just complacent out there in the broad volatility space. But that said, there's a lot to get to. Let's kick it off. Let's kick it off with the man who hasn't been on in a while. Let's see if he can remember to find his mute and indeed his unmute button. I'm talking about former corner office man, Mr. Russell Rhodes, the man about town over there at the CBOE. Mr. Rhodes, what was catching your eye this week from a vol perspective, sir?
The fact that we've started to drift back in, I thought we'd finally found a floor. But how many times have I said that? You could start using. I think pretty much
once a week for the last couple of years or so. Is pretty much about right.
No. Sometimes I'm kind of like, I'm not shocked that we dipped back down. But the way VIX had been holding up when the S&P 500 was holding up as well, it's just been surprising. So
that's what caught your eye this week. Just that. Nothing else?
Yeah, just the lower. I was surprised at the lower VIX is probably that. And then there's some stuff with the weeklies that I want to talk about that caught my eye that's worrisome to me. But we will hold on to that.
Yes, we are not at the weeklies segment yet. If you can say that, just take that cut and repeat. Surprised at the lower VIX. You can pretty much copy and paste that for the entirety of 2017 post January 20th. And that would pretty much be the rhetoric for almost every week of this year so far, maybe one or two notwithstanding in there. Mr. Rock Lobster, same question for you, sir. Are you also surprised at the ever retreating VIX? And what else caught your eye out there, sir?
I am. I should say I'm not really surprised because as long as realized vol is 3% or whatever it is, VIX will find this level. We have healthy weekend destruction. But like Russell said earlier in the week, the vol was a little bouncy for strange reasons. Our clients actually traded VIX puts back and forth like crazy, having a good time. But we said at the beginning of the year, will Donald Trump be a 9 VIX, single-digit VIX president? And oh my gosh, I don't know how. Maybe there's an inverse correlation between the volatility of the tweets and the volatility of the market. I don't know, but looks like there's going to be some kind of tax thing. And it looks like the Munchin got his Fed guy. So it's kind of like, status quo stuff tends to crush volatility. And, I guess the president is the current status quo, and all the other stuff is, I would say probably volatility reducing. And then long term, the market's reducing vol. Also, I would say the unbelievable strength in earnings from the a lot of big companies, that's another vol crusher. It's just, is when the clearer the horizon becomes, the lower vol goes. It's been like that, I don't know, as long as I've been trading. And that's getting on years now. I don't want to say how many because it makes me feel a little bit older than I feel like. But that's what we have. And as long as the market loves certainty, the market loves boring. That's what makes stocks rally. Besides tweet volume and stuff like that, everything else has been kind of boringly complacent. Business positive. There's a lot of stuff on. The only other thing is like NAFTA and stuff like that in trade, but it seems like the pattern has been to stake out these crazy positions and then sort of come back to the middle on a lot of these issues. So the early volatility we got from that is just not showing up anymore because there seems to be some sort of compromise. So I would say just looking at that, it's not surprising me much. But again, there's 9 vols always for a reason. As Don would say, there's no realized vol. You're not going to have a lot of implied volatility. The only place that I would say, not the only place, but the Russell is showing a little more volatility than the rest of everything else. So that's a place, if you're going to sell your iron condors and try to get some juice for something, that is a place, but the Russell's also moving much more than everything else. It had a 1% down day, I think, this week. Kind of went by. Nobody sort of said much about it. So, RVX is, 15, and VIX is 920. So that gives you a big story right there. Major indices with that big of a disparity in vol. But that is my vol story.
You bring up your RVX, and your counterpart there, your work wife, also was talking to Russell recently on the show. So I asked him the same question that I will ask you now, sir. You just invoked our old friend there, RVX. I've been talking to the Russell folks. They're hoping to get a little juice back in that. If you're not familiar with that, of course, listeners, RVX is the Russell 2000 VIX. Mr. Greasy Meatball, I'll ask you the same, or not Greasy Meatball, Mr. Rock Lobster, I shall ask you the same question that I asked the Greasy Meatball, and hopefully we'll see what the results shall be. But this is usually the time when RVX, if it does lights it up at these times when there's this disassociation between VIX and Russell vol. You see a nice little spread trade popping up there, and they actually get a little bit of action over there. So that said, sir, how many contracts do you think are on the tape today for RVX?
On the tape, and honest to goodness, I haven't looked. That's in the RVX. I'm going to say 125.
Wow. Getting a little too rich for our blood. It's a whopping 0, sir, unfortunately. So no love. Open interest, 245 contracts. I keep playing this game hoping someday that there will be like a 5 lot or something, But it's just some reason, we talked about this before, when you had Pat and those guys from Russell on, that, it hasn't connected. But I think now they're fully committed to this product. I think they're going to try to give it a little bit of life. Because it should be, like you said, it should be trading right now. This is the time when everyone out there and their mother is writing to us saying, where is the vol? There's no vol. There's no vol to be found. Oh, why is VIX so low? I hate VIX, etc. And here's your perfect counterpoint to that. Here you go. Here's something that has actually a little bit of vol. Certainly a lot more than what's in VIX. It's a 15 versus a 9. That at least alone is something you can look at and sink your your teeth into it. Yet nobody's touching it. So yeah, it's an interesting historical footnote. Speaking of which, historical footnotes, you guys, you know, we talk a lot about the CBOE blogs here. Mr. Rhodes posts there a lot. Some other of his counterparts and colleagues over there too, including Matt and his team over there. But they post a lot of historical data on all things VIX. I'm sure Mr. Rhodes has to sign off on a lot of it before it goes live because he is the man formerly in the corner office, now man about town over there. And some interesting stuff. You're talking about kind of the dearth of realized vol out there, Mr. Rock Lobster. And, you know, I didn't realize, I knew it had been so low, but until I looked at this chart, I didn't realize how low it bottomed out just recently back in middle of October. You know, it's been around a 5 or a 6 for so long that I kind of stopped looking at it. But yeah, it hit a 3.4 realized vol. This is 20-day realized out there in the SPX, a 3.4 back in mid-October, which is, just think about that, listeners. Everyone who's writing to us and saying, oh, VIX is so low, it can't possibly get any lower, I should buy this. And you know what? Macro-wise, globally, I could see why you could arrive at that conclusion. It is not an irrational conclusion to reach. On the flip side, numbers-wise, you see numbers like this, the math does not lie. And from a mathematical perspective, this VIX is outlandishly overpriced. Obviously, we're a little bit off that 3.4 level now, but still, it's interesting. In fact, let's pull it up right now to see what our realized is out there as we speak, if my platform will catch up with me here. I'm moving too fast for it. Here we go. Yeah, 30-day realized. I usually look at 30-day, not 20-day, but I'll take 30-day too. 30-day realized, 4.42 out there in the S right now. So about a handle higher, but still well south of 5. So everyone out there who's saying, oh, this VIX of 9.25, actually 9.30 right now. Wow, this is well shy of even my pessimistic prediction for this week. So, wow, look out below here. Mr. Rhodes, I know you like looking at all this data. Any thoughts here on kind of just the you know, you mentioned how low VIX is, but these just repeated troughs of realized, is this stuff surprise to you, or this kind of what you expected?
The how low it was kind of surprise to me when Matt sent all that stuff over to me before we put it up on the blog site. That, you know, a 3 handle on realized volatility is pretty ridiculous when you think about it. I thought it was pretty cool that he also pointed out how low the realized volatility has been on some of the strategy indexes we have over here, especially the S&P put right. He noted that the realized volatility in October for the put right index was less than 1. Which for any sort of strategy index, that's absolutely unbelievable, and it's still making a little bit of money too. But I guess if you don't take in a whole lot of premium and the market trades up, and you've got an index that's based on selling puts, and they're suddenly out of the money puts, they're not going to change in value very much from day to day. So, it's just absolutely, it's mind blowing how quiet things are right now. While you guys are talking, because I like to do math while you talk, I'm investigating the relationship between RVX and VIX, and I want to talk about it before we're done. But you got to give me a couple of minutes to figure something out here.
That's Mr. Rhodes, doing math while we talk all the time. If he always sounds a little preoccupied, that's why. He'll just randomly do math while you talk to him sometimes, which is interesting. Speaking of all the math that's catching our eye out there, VVIX, the volatility of VIX, still frothy, but not quite as hefty as it was. You know, it was pushing the 100 level last time we talked. These days, about around a 90 or so. So still off of its 52-week floor, somewhere around the mid-70 range, but nowhere near, you know, the 120, 140 crazy times we're seeing. So slightly frothy. But VIX is kind of moving a bit today. Remember, people don't think of this, but downside moving in VIX is still moving in VIX. So it counts in the old equation, whether you see it that way or not. Skew index also continues to come off. Remember, we said it was flirting with that perilous level that when Mr. Russell starts mopping his brow of around 150 not that long ago. Now it's come off. Came off a lot last week, coming off again this week, right around to 136 now, 6 points lower than it was at this time last week. So those of you who like to watch all things Skew, there you go. Bear in mind, like we said, there's a lot of moving parts to that one number. So if you want to maybe break down that a little bit independently, maybe tune into our TWIFO a little bit. We like to break down things using what we call the quick skew, looking at the puts and the calls separately and independently. So we can give you a little bit more on that in about an hour or so on that program. And out there, of course, NASDAQ's been moving, so VXN, good old NASDAQ VIX, also right around a 14 level. Futures, obviously that gulf with the CBOE selling off, with the CBOE, with the SPX selling on, VIX selling off, it's going to widen out a little bit. Coming in this morning, it was already pretty wide, about 1.25 from the front month to the cash, and about 2.3 or so to the second month. Obviously, the sell-off during the show is going to just exacerbate that even further. Speaking of exacerbating things, sometimes the weekly paper out there, it tends to exasperate us because it's just so crazy. So let's see what Mr. Rhodes can do to exasperate us this week, because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, you guys know the drill. This is the portion of the show where Mr. Rhodes holds court for 30 to 40 minutes on all things VIX weekly options. Russell, I think I said on the last show, you wouldn't know because you weren't here. Something on the lines of there seem to be these narratives evolving in the VIX weekly paper, and there's a couple of trends. One is size is getting more sizable, and two, it's kind of strange. We're seeing weirder stuff out there than we have typically seen for typical use cases for weeklies in the past, certainly when it comes to VIX. So that said, did you find anything that meets those criteria this week, sir?
I have 5 pages of trades.
Well, there you go. Well,
and I'm happy to read all of them if you want.
We'll extend the show this week.
There's a lot more going on. Are you there?
We're here. Yeah, go for it, sir.
Okay. All right. Oh, yeah. So Monday. Somebody sold some of the November 8th 10 puts for 17 cents, bought some of the November 8th 9.5 puts for 7 cents. They're taking in a 10-cent credit. This is a terrible trade. Especially because we keep getting settlements under 10. On Monday, I can understand why you might do something like that, but now that we're, I guess in hindsight, it looks like a bad trade. Somebody bought 850 of the November 8th 1050 calls for 95 cents. Again, we are falling apart, so that ain't looking too hot. Every trade I'm going to tell you is a bad trade today. Somebody sold 249 of the November 1st 10.5 puts for 25 cents on Monday. November 1st settlement was $9.77, so they had to pay back 48 cents for taking in a credit of 25 cents. This is what I wanted to, this is kind of the trend that I saw this week, and the trade I'm getting ready to throw out there, I could probably mention it 40 or 50 times from this past week. There seems to be a lot of short-dated, way out of the money call sellers in VIX. Somebody sold 200 of the November 8th 19 calls for a dime. I have seen all kinds of nickel, dime, maybe even 15 cents, but not a whole lot of premium being taken in for out of the money weekly calls. And they scare the pants off of me. If I were a risk manager at these people's firms, I would be having closed door meetings with them about this. It's working, and it will continue to work until, as Mr. Bittman used to put it, it doesn't. And when it doesn't, it's going to be painful. I could get on my soapbox. Let's go down to Bughouse Square and get on our soapboxes and yell about this for a while. But really, I saw dozens of trades like that one. I'm not going to repeat every single one of them. But that's the trend that I saw this week that I didn't mention before. A nice trade here. Somebody bought 250 of the November 1st 11 puts for 70 cents. They got $1.23 for those. They held them through Wednesday's settlement. Somebody bought 200 of the November 29th 18 calls for 35 cents. Thank God somebody is buying some out-of-the-money calls. And then one more trade that somebody bought 200 of the November 1st 10.5 puts for 19 cents and sold 200 of the November 1st 10 puts for 4 cents, paid 15 cents, got 35 cents based on settlement. Tuesday, again, saw a couple of bearish trades into the Wednesday settlement. A buyer of 500 of the November 1st 10.5 puts for 40 cents. Those turned out pretty well. They ended up being worth 73 cents. Somebody sold 250 of the November 8th 18 calls for a dime. Again, I could just keep saying that over and over again with slightly different numbers, but a lot of out of the money call sellers. And this may be taking advantage of VVIX being relatively high. but still, it's bothersome to me. I hate to see people get carried out, even if I'm on the other side of the trade. I don't want to see people get carried out. Somebody came back with this 10 put spread. They bought 150 of the 10.5s for 32 cents, sold 150 of the 10 puts for 6 cents. Those expired Wednesday on the open, and they paid 26 cents for that trade. Ended up being worth 24 extra cents at expiration. And then there was somebody selling late Tuesday, sold 250 of the November 1st 11 calls for 17 cents, and bought 250 of the November 1st 11.5 calls for 12 cents. They took in a nickel with no danger of losing money on that one. On Wednesday, people started to spend more time paying attention to the November 8th options. In fact, every trade is the November 8th expiration on Wednesday. Seller of the 9 calls for $1.65, basically being short VIX from 1065 down to 9. Andrew on the chat here said he thinks we're going to, I'm calling you out and sharing our secrets, Andrew. He said he wouldn't be shocked if we see a VIX close under 9 today. So this person actually might be in danger if he's correct, if that holds up through next week. Somebody else sold 100 of the November 8th 10 puts for 20 cents, expecting a settlement above 10. This was an interesting trade, buying 410 of the November 8th 9.5 calls for $1.16. Then they sold 410 of the November 8th 10 calls for 82 cents. That cost 34 cents. Settlement above 10, and you make an extra 16 cents off of that. Somebody sold 100 of the November 8th 11 calls for 50 cents. And then somebody turned around, different trade, bought 200 of the November 8th 12 calls for 30 cents, and then turned around and bought another 184 of those calls for 30 cents a few minutes later. And then there was a buyer of 220 of the November 8th 15 calls for 10 cents. So a couple of out-of-the-money buyers. There were still out-of-the-money call sellers throughout the day on Wednesday. They showed up on Thursday. Somebody sold 100 of the November 8th 1150 calls for 35 cents. Oh, my gosh. And then this one, I really like this one. You're talking about size. And I like this one as an example of the kind of size that you can do in the non-standard expirations. Somebody sold 10,000 of the December 6th 16 calls for 55 cents. And then they came back in several lots and sold 15,000 more for 55 cents on Thursday. So, it's not going to make one of the biggest strikes as far as open interest goes, but maybe we should, and I'm not going to do the work on this, but I'm just going to throw the idea out there. Maybe we should take a look at what the biggest open interest on the non-standard strikes is sometime. And then somebody sold 100 of the November 29th 19 calls for 25 cents, going a little bit farther out on the out of the money expirations. Today, got a buyer of 991 of the November 8th 10 puts for 20 cents. Looking pretty good for the moment. And then somebody bought 400 of the November 8th 15 calls for a nickel. Somebody really expecting something bad to happen over the weekend. If something bad happens, I'm gonna write it up and get the conspiracy theorists going on that buy the 400 of the November 8th 15 calls actually came out of the Kremlin or something. I totally made that up, and that was sarcasm for people listening. And then finally, a trade today. Somebody bought 7,381 of the December 6th 15 calls for 55 cents. They sold those, and they bought 3,763 of the December 6th 16 calls for 50 cents. It is almost a selling 2 and buying 1. It's very close. There's a handful of contract difference there. I wonder if they made the odd lot up somewhere else and it just didn't show up on my screen. It's like they sold, if you double the number that they bought and then add a dozen, I think you just about get how many they sold. But took in, for each of those spreads, if we make it a selling 2, buying 1, they took in a dime, and they're good below 15. Not sure why you do this, but they did it. So there. I took up 9.5 minutes.
You can say that for a lot of the VIX weekly trades. Not sure why they do this. That could be another narrative. It kind of goes back to what I was saying before, size and strange. And you certainly did reinforce that this week. I think a couple of those ones you were reading off there, more than a couple. I was kind of getting a little bit of the heebie-jeebies there. I'm sure the risk manager and the rock lobster was kind of getting a little concerned there too. Like, who's allowing these people are playing pretty close to the fire? It's the
there
old,
are tons of those.
Yes.
It's worrying me. I'm more concerned about those types of trades than I am, the high short interest in the VIX futures.
Yeah, because those obviously
I'm really more concerned about those sorts of trades, and not for the overall market. When I say that, I'm concerned for the people that put them on.
Yeah, you kind of wonder then at that point, how maybe this narrative of the short vol trade, the VIX feedback loop, call it what you will, is reaching out to all these quarters, maybe including farther out into the retail, and they're starting to come in and use these products. And again, we're speculating. We don't know who's behind this, and they're sizable and it's not retail, but still, just the trend is probably a little bit alarming that there's perhaps this narrative has gone a bit too far, and it's sucking people in who don't know perhaps how quickly this can go against them. And again, when you're shorting the weekly options, very high gamma instruments, the futures, they can obviously gap up too, but usually you can maybe try to find a way to cover those. The options, that will explode in your face very quickly, and there's not much you can do to stem the bleeding once that happens. So yeah, interesting stuff. Like we say, it works until it doesn't. So maybe enjoy this relatively tranquil period where it does appear to be working. All right, let's move on to what's been lighting up out here in the big VIX mothership options for this week. A comparatively tranquil week compared to the, of course, to the recent weeks we've seen. We had some, multi-million, contract days out there. ADV hovering around 833. So coming off its highs around 870, 880 out there recently, again reflecting a little bit of a quieter period going on here the last week or two. So far today, we're hitting about 322. It doesn't seem like we're going to hit the ADV. In fact, no day this week did they hit the ADV. About 585 yesterday. That was pretty much the highest of the week. 437,000 on Wednesday, 431,000 on Tuesday, 429K on Monday. So all roughly half, or a little bit more of the ADV this week. The kicks call the put still hovering around that 3.94 level out there. So Mr. Rhodes still a little bit nervous. He's mopping his brow with some of his sweat, as he is wont to do pretty much every week on this show. That's why we don't have a video show, listeners. All right, moving on to what's lighting it up out there in the hot VIX mothership land. Number one with the bullet yet again are these DEES 25s. This guy has kind of changed the VIX chart for forever, at least until the end of the year here with this size crazy three-legged DEES trade he did. 620,000 of those bad boys open right now. Number two, a distant number two, 475,000, still very rich, but nowhere near number one, are the DEES 15. So again, part two of that three-legged trade, 475,000 open there. Number three, the NOV 20s fighting their way up the chart to third place, 411,000 open there. Number four, the first and only put on the list, surprise, surprise, is the DEES 12 puts, part three of that three-legged spread out there. It got pushed down by the NOV 20s. For a while there, it was 1, 2, and 3 were just three legs of that spread. 367,000 open there. Number five, the NOV 21s, 290K out there. Number six, the NOV 17s, 259,000. Number seven, the NOV 15s, 250, a nice straight $250,000 open there. Number eight, the DEES 22s, comparatively reasonable to the DEES 25s, 244,000. Number nine, the DEES 17, so a nice little DEES call strip going here, 221,000. Rounding up the top 10, the ever so reasonable NOV 18s, only 217,000 of those bad boys open. Open interest getting pretty frothy, pretty hefty, about nearly 12 million, 11.7 million there, about 9.3 on the calls, and about 2.4 million on the puts. Before we roll on into some other activity, including some earnings, vol, and some VXX and everything else, Mr. Greasy, I almost called you Greasy Meatball again, I apologize. Mr. Rock Lobster, anything catching your eye out there in the big VIX mothership options this week that maybe was worthy of note out there?
The thing that was really noticeable, for at least for us, we were active trading 12 puts, a lot of 1x2 put spreads, had good trading 1x2 put spreads. So I think the opportunity is more on the put side for VIX right now than the calls. So that's just, that's something we've been trading. So, just because, and like Russell says, the calls are a tough sale at this level. So I think there's a lot of opportunity on the put side, and with VIX where it is, you've got I just guess elasticity is the right word, of that near-term future kind of bouncing around. As we close to expiration, they're just saying there's some opportunity in that future is, let's just call it the no future is, or how was this week, lively. It was a very lively future with, net for the product, a pretty decent range.
Before we jump into the earnings, obviously a lot of earnings vol popping off this week. I know Mr. Rhodes is a big fan of earnings season as well. I'm going to play a little quiz with you, Mr. Rocklop, that I like playing with the greasy meatball. He has a bit of an inside track into this one, so he usually can get it right. That's kind of a leading question. You might as well. You probably can guess this if you think hard and long. Right now, sir, VXX, obviously a very popular ETP for all volatility VIX related trades. Taking on the chin again this week, 33.75, about 2.5 points lower than it was this time last week. In fact, let's pull it up now. About 33.5. So yeah, even lower, a little bit lower than it was coming in this morning. That said, Mr. Rocklops, if you had to guess right now, the number one options position, the number one big hot open interest strike, number one with the bullet out there in VXX land, what do you think it is?
It's the puts, the long-term puts.
Do you recall the strike?
I don't know, 8, 9 strikes, something like that.
The Jan 10 puts. Jan 2019, 10 puts, about 115,000 of those bad boys. How many of those are you guys?
$10 in the money.
How many of those are you guys?
We own some.
See,
we do.
That's what we get. That's what we get for doing the show. We do nothing but giving trading ideas here to Carmen Line every week out here on the show. But I like to do that little test because I know you guys like those puts. And of course, it was the genesis for all of that love here, talking about these puts one day, and it engendered an interesting discussion, which led to you guys putting some on, and clearly there's still a bunch open. They're still number one by a pretty sizable margin. Number two are just the regular monthly Jan 10 puts, the comparatively near term Jan 10 puts, 75,000 open there. Jan 5 puts, Jan 2019 5 puts, also 75,000 open there. So people are getting pretty pessimistic. But looking at the way VXX is already eroded, I'm kicking myself I didn't get into this bad boy already. I've been kind of busy doing other things. I've been playing the wait and see game. I've already seen a good 10 handles and more come out of this bad boy already. So the erosion, the ever popular erosion that is all things VXX. Speaking of ever popular, earnings have been ever popular. This is another hot week for all things earnings. We saw some big names reporting again this week. So it wasn't all last week. Last week was just a crazy outlier, particularly on Thursday, with pretty much every big name reporting on Thursday. Microsoft, Amazon, etc., all just blowing the doors off their earnings straddles, 2x, 3x, 4x, just crazy multiples, things you don't really see. That's the one outlier day that if you're a short premium writer who's always writing to us saying, hey, I love selling premium and earnings, it works great. That's the day where you say it works until it doesn't. That's the day it doesn't work, and that's the day that wipes out, months, if not years worth of, making 30 cents, making 60 cents, making 30 cents every quarter. Bam, you lose $7. That's going to leave a mark. This week has been a little bit different. The narrative for most of this quarter, at least for the big names, has been, buy premium. It seems to actually have been working. These names are just knocking it out of the park. This week, we'll see if that continues. We saw some big names popping off earlier this week, including Facebook. They closed at around about 182.5 when they were going into their earnings. They were pricing about a $9 straddle, so right around 5%. They opened up the next day. Again, this is just a immediate day after, so in subsequent days, they could have had a little bit of movement. In this case, Facebook doesn't appear to be the case. They opened up down about $2, so nowhere near that $9 they were pricing in. Intraday, it traded down to about $5, but it never really got down to that extended range. So you got about a little more of your straddle out of that one if you were savvy. And it's a little bit of maybe aggressive scalping. It did retrace a little bit, so maybe you could do a little bit of scalping there, but you didn't really get the big move. So Facebook not in the buy premium club this cycle. Tesla, our old friend Tesla as well. That one just another day, another headline, another crazy move out there in Tesla. They closed at 321 and change. They were pricing in about $25, so somewhere in the neighborhood of 8%. They opened up that next morning down $20. So pretty much right in line. They traded down that day down to about $25, so pretty much right in line with what they were pricing in out there. So that's one of the rare scenarios where the Tesla straddle seemed to be fairly prescient. It actually priced in pretty much exactly what we saw. And as we're looking at it right now, it's still at about 298 out there. So it hasn't really aggressively moved much in either direction. It kind of just seems to have been planted here around this right at 300, a little bit shy of that level. So the straddle actually looking pretty fairly priced. And looking here to Apple, fast forward to last night's big name. They closed at around nearly 167, about 166 and change. They were pricing in about 7.25 moves, so a little over 4, between 4 and 4.5%. And they opened up today about up about nearly $6, $5.77. They're trading up about 173 now. So yeah, they're looking pretty good. Not quite to the extent that they were pricing in. So maybe this is a rare time. I know, Mr. Rocklopster, you guys were saying in the past if there was a name you maybe wanted to buy, Apple was kind of the one. This cycle, it seemed like they were a little bit more pricing it a little bit richer. Are you glad you stayed away from the Apple premium buying spree this time, sir?
You know, I did stay away from the Apple premium buying spree. As funny as this sounds, not very long ago, you could buy Apple Volatility 2 months after earnings, or expiring 2 months after the current earnings. That vol had gotten down to 16% with the earnings date. So, and I think last cycle was around 22%. So it very obviously from the straddle value, just all those numbers have gotten a lot bigger in tech. So, but we did stay away from, at least I did anyway. I stayed away from Apple this time. And we even tried to find an Apple trade today after the close. Nothing really looked great except really just kind of being long. So, wow, that's a lot of a lot of insight there, but that's about all we had. And actually, what we're trading 171.5. So, okay, it was right for $2 so far. So that's I think too, just kind of levels of vol. And I'm not really a seller of the technology vol at all, just because it just keeps grinding higher, and it's just been a hard trade. It's been a hard trade to be on the other side of.
And Mr. Rhodes, same question for you. Obviously, a lot of names popping off. Earnings season, we tend not to trade it here. We like to talk about not trading it, but people love it. It's fascinating, and it creates a lot of opportunities before and after the event itself, if not the crazy, frothy event. Anything catching your eye out there from a vol spectrum this week and all the names that are popping off?
Not in the individual names. We just went through the typical VXN being a little bit elevated relative to the other volatility indexes, because because one of the big components, the biggest component, Apple, was reporting on Thursday, and now you're seeing a bit of a relative volatility crush with VXN versus VIX. It's too bad you can't trade that anymore, because that was a nice kind of a nice way to spread a couple of different futures versus each other. You probably find some better way or some other ways to go about doing that with maybe Q options and SPY options. But that otherwise, my new directive at CBOE is not to be looking at individual stocks. So my days of concentrating on earnings are kind of behind me.
So they're shifting you into the closet man cave, they're getting you away from stocks. What's going on over there, Mr. Rhodes land? What is this new mandate they're giving you, sir?
My new title is GIMP.
GIMP in the man cave. Since you're not talking individual name vol, I know like you guys like that stuff, so you have questions, hit us up about there. But also commodities active. We clearly are going to talk a lot about that on Twifo in a little bit. But of course, commodity vol continues to kind of hover near some pretty impressive lows, particularly out there in gold. GVZ out there, 10.5, if not lower. If you don't know GVZ, that's kind of the gold VIX listeners measures kind of the implied volatility of GVZ, right around 10.5, a little bit higher, 1060 odd right now, but still at or near multi-year lows out there. I think we were talking on Twifo recently, as you put out the 5-year vol cone of implied vol out there, or even it's hovering near the bottoms of that. That's how low that gold vol is getting, and yet every week it continues to slowly erode lower. So all the people who are hoping to scoop up some cheap juice out there in gold land and get a nice little pop on it, you've kind of been disappointed. It's been a rough trade, pretty much any side of the fence that you've been on of late. And same kind of holds for oil. We've seen a few little pops in oil vol out there, but even OIV, the oil VIX still around 24, which is quite low back, in the frothier days of oil about a year ago or so. We saw oil OIV would kind of bottom out around 35, and they got into the 50s and beyond. These days, not seeing that anymore, and this little new higher regime of oil vol is a lot lower, and it just hasn't really had a chance to pop up. Anything else catching your eye out there, commodity-wise or otherwise, before we get to the listener questions, Mr. Rhodes?
No, they're just kind of hovering around, and it used to be we could either talk about oil or gold, but both of them aren't doing enough for us to get excited about right now. We're gonna have to create some more indexes.
Indeed, have to get some more stuff going on. Speaking of getting things on, looks like the nor'easter out there that wiped out a lot of power in Maine seems to have claimed another victim in the rock lobster. We shall do our best to get him back, listeners, while we transition to your questions. It's just time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys hit us up, and you guys do send us quite the many and varied questions out there. We got this Bitcoin poll. I think we'll hold on to that. Maybe we'll talk about that on TWIFO a little bit because we got so many other questions here to do. And I think crypto tends to be our crypto show here on the network for default purposes. So you guys send questions into that one. So maybe we'll talk a little bit of crypto on that one. Meanwhile, you guys are hitting up us all kinds of questions. Let's pull up here. What do we got? Oh, Tech Coleslaw saying, who feels sorry for all the put buyers in VIX in August? Yeah, that's the challenge of this options gig. There's a time component, and they were a little bit ahead of the game. They were maybe right track, just wrong month. We were just saying that before on our option block show. Someone was complaining about how he bought puts in Tesla, but they expired like a week before all this mad sell-off happened. Same thing, it's the challenge of this timing aspect of options. It makes it interesting, a lot frustrating at times, and also fun. So that's the sellout. Yeah, that's the trade-off. All those people who were loading up on AUG puts did all right, but not quite. Not certainly. We're plumbing new depths here in VIX as we speak. Speaking of which, who else? You see, this guy Reasons Unknown has been just hitting us up with VIX charts all week. I will forgive him. He writes in and says, "Oh, please talk about this on Friday's VIX views." It's not VIX views, it's volatility views. We do talk a lot about VIX, but it is not VIX views, at least not yet. CBOE hasn't bought in perpetuity naming rights here, branding rights on the show. But he sends in a bunch of charts. We'll include them in the show notes. Let's see what these charts are. It's like VIX futures term structure for today. And he also overlaid on this September 29th. And the September 29th curve is a little bit higher. And he says, my take on this chart is that risk is creeping higher. Then he also sent in another one right as we're doing the show right now. The same chart of today's term structure versus September 29th. Again, September 29th is a little bit higher in the term structure here. This a little bit more juice across the curve, with the exception of one little intersection between 60 and 90 days there. And he says here now, the VIX curve is pancaking now. Please discuss. I don't know, Mr. Rhodes. I don't look at either of these charts and feel the gnawing fear of creeping risk. Are you buying here what Reasons Unknown is selling?
Whoa, I keep hitting the wrong button there. No, see, if I start talking about things that I'm concerned about, you start making fun of me. So
well, that's only when you get concerned about things like, the VIX call to put and Skew index and fun stuff, esoteric stuff like that. We'll leave you alone for the term structure.
Okay. Now the term structure, I almost feel like we're going to have to use it as a counter type thing. And when it finally flattens the heck out and there's no risk priced in and we haven't quite gotten there, then maybe that's when we need to be a little bit more concerned about maybe the short interest in the VIX futures when they're not pricing in nearly enough of a risk premium over the spot VIX. So I'm not, and I'm looking at the chart that he sent. It's not, it's not concerning yet. To me, it would be concerning if it flattens out too much.
Yeah, this chart looks to me like just like a standard VIX futures term structure chart.
Well, no, I can kind of see what he's saying with respect to the today, where we've gotten the crush on the nearer term, and you and I are talking about something that nobody else can see right now, but where the near term line where he's got the I think it's out to about 45 days or so, is looking pretty low compared to where we've been, but that you got to throw that seasonal factor with respect to Christmas time in there. He's showing a chart from September 29th and chart today, and the bump to the downside in the chart are both kind of holiday related. So
I'm trying to remember what's the significance of September 29th? Nothing really of note happened on that day. I guess it's just
I think he just happened to take the last day of the quarter, and he's comparing it to he took the last day of a month, and we're very close to a month. When did he send this?
He's been sending these all week. This one came in this morning. He sent one earlier. He's been inundating us with VIX futures term structure charts and his concerns therein.
I was just trying to, because I thought maybe he was comparing the last day of September and the last day of October. That's why I was asking.
No reasonable time frame like that. But I get what you're saying on the quarter, Mr. Rock Lobster. Now that you've regained power in Maine, there, sir. This chart doesn't concern me. I don't know. Maybe it concerns you guys more. Seemingly, it apparently has him all riled up. He's hitting us up with it left and right.
Yeah, really, what it is to me, it's like zone one, which is the bottom quartile for VIX. There's nothing super impressive about that, at least at Option Pit. It's kind of normal-ish and seasonal. That's what I would say with this. It doesn't mean that vol can't go up, but it doesn't look. I don't know if reasons unknown should be that concerned just from that curve. Because the lower VIX goes, you get kind of the pointy nose of the term structure down there. So it's supposed to do that.
Yeah, maybe it's exactly. It's supposed to do that. Maybe this guy just discovered the VIX futures term structure, and he's like, "Oh my God, this is crazy." In which case, if that's the case, sir, welcome to this show from like 4 or 5 years ago. But yeah, that's we appreciate your concerns. It's just we're not seeing it yet. Let's see. Our old buddy Don, my old co-host here on the show, he wrote in. He had some. I knew he would. I knew once we started talking about memories of Black Monday that he would have his own thoughts on this. He wrote in and said, I wish you'd called me for that Vol Views where you talked about Black Monday. I would have regaled you with stories from the Morgan Stanley trading desk about Black Monday." He includes one here, but none of them would have been better than the one of my old buddy and colleague. I'll leave the name out in case this guy. I don't know why he wouldn't want to be named. He made a boatload of money. His colleague, let's just call him Peter, who in August 1987 decided that the market was overdone. This guy was savvy and invested 20 grand of his own money in out-of-the-money SPX November put. 20 grand in 1987. That's a lot of dollar. That guy was seriously convinced, and he didn't buy 1-year puts. He bought like a couple of month puts. So this guy was seriously convinced that the end was coming. And those options, which were trading an eighth, so 0.0125 for all of you who didn't trade teenies back then, listeners, they were trading an eighth before the crash, went to $50. And his 20 grand turned into 400 times that, or wait for it, $8 million. The good old days, Don. That brings a warm fuzzy, and also I'm kind of impressed with this guy's conviction. I mean, you're talking the equivalent of nearly 6 figures to just plunk down in very near-term S&P puts. To do that right now would probably take a lot of gusto, and probably wouldn't have worked out that well. But in this case, Mr. Rock Lobster, out of the money puts in the S&P. Who knew? They worked out pretty well in 1987, huh?
They worked out pretty. Similar stories. I know a guy that bought the book in the OEX, 1987. In the old days, buy the book, and you see all the, the 999 and the old Quotrons, and you think, there's 1,000 or whatever. There's like 15,000 puts.
Wow.
So
did he get them all?
He got them all because they cleared 15. He bought the book, right? Nobody else bought them.
Oh my God.
So, and they said, he thought it was 1,000. It was like 10 or 15,000. So he's like, oh yeah, I know that. I just wrote it wrong.
Oh yeah, I'm good for that now. Let me just go mortgage my house to cover that clearing payment, because those are now worth $100 million or whatever the case may be.
They're 22.
Yeah, I'm good for that. Put me down for that. I know those.
I got it.
Yeah, I'm good. I'll take those.
I'm good.
Wow. Yeah, there's a lot of stories like that in 1987. Just a couple here to regale us. Let's see. We got time for a quick one. Iron condors versus flies is a much longer conversation. Mr. Rockloffer, did you ever dig up this thing for your buddy Hawkeye there? Remember you said you had some prospectus. He had some question about, what was it? He had some question last week or a couple weeks ago about SPXY. Remember you going to dig up something about that? Did you ever find that?
I was going to the OCC. Russell actually might know the answer to that when they have to open a closed product. That was a question, right? When the exchange closes the product, where do the options settle through
SPXY
open
got
rotation?
halted, and he's in an IRA, and the fund had to close because it hits the fan. How would I exercise them if the fund doesn't trade? I can't cover due to the underlying being frozen, and I can't exercise without covering, so that would put me short in my IRA. It's a unique scenario. We're talking about OCC, obviously the keeper of the kingdom.
It's a Yogi Berra answer. It's cash, which is just as good as money. If let's just say you own a 10-strike put and a company goes bankrupt and stock goes to zero, you get $10.
There you go.
Yeah, that's in cases where things, and that's not now if that fund got absorbed by another one and you'd probably get options in the other fund or something like that. And if a company buys another company, for a while there were Merrill Lynch options that involved like $30 cash and 23 shares of Merrill Lynch, but they were based on Bank of America. And that was a decade ago now. But in the case of something going to zero, and we've gotten this question, and I'm not saying this will ever happen. I'm just saying we got this question. But we've gotten this question with respect to the short volatility exchange traded products, specifically SVXY, that everybody's worried if the underlying goes up 100%, it will go to zero. Well, if it goes to zero and it gets closed, you get a cash settlement. And you own some puts. If you're short some puts, you're going to have to pay cash, which is just as good as money again.
Or you're going to head out
a lot of cash.
You're going to head out to O'Hare and try to escape those puts. Yeah, I think we kind of knew that part. It was just more like he was more concerned about obviously if these things go to zero, they go to zero. He was more concerned about it being frozen in the interim. But yeah, that's where OCC would have to come up with some sort of settlement price for you. In this case, it probably would be zero. So Mr. Rhodes is still correct that pretty much all roads lead to zero in this scenario. So if you are worried about this, you will. It's money. You bought that with the right to sell it at a price that is higher, even if it's gone away. It means it's zero. It means you can still sell it. So yes, you can do that, but always check with OCC on these kind of vague, weird corporate actions. These ones are more straightforward. As Mr. Rhodes alluded, there's all kinds of ones that are 1-for-3 share swaps and weird ratios and all kinds of weird. They get kind of funky, so they always have a circular on the particular thing. So if you're worried about this, something happens, hit them up. They will usually. You can even call them. They have 888 options, and they'll walk you through it probably. So hit them up. They are the keepers to the kingdom of all that stuff. Speaking of keeping the kingdom, we got to get rolling to our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, and as we speak, the VIX crash crushing, just to use a technical term, just continues unabated. I was easily the low man on the totem pole of my guest last week, and I'm still looking pretty hefty. I'm almost 0.4 away at this point. We're hovering right about 930, 929, 9.29 out there in VIX cash. So plumbing new historical depths. I'll leave that to Mr. Rhodes to filter out exactly where that stands on the historical timeline. But it looks like I am the winner I was at 9.65, so I will take that. Miss Ophir, actually our guest last week, was second closest with 9.8. Mr. Meatball was crazy land, 10.16. How dare he think such lofty levels of volatility? And the ghost of Russell, ever enthusiastic in buying vol once again, coming in at this time at a 38. So I guess he was buying on some of those weekly fixed option trades or something. All right, so that means I win. So I get to choose who goes first, or I get to go first. I'm going to be a jerk and go first because I like it, and also because that means I can keep my winning streak alive. We shall see. And we're plumbing some interesting depths. We had non-farms this week. That didn't really budge the needle. We had earnings this week. That didn't really, I mean, we were a little bit higher earlier in the week, but I knew by the end of the week it probably would come off. That's exactly what we saw. So barring this, I don't see us at these levels, but I don't see us crazy land higher too. I kind of like where I was last week. I'm just going to dip it down a little bit, actually. I'm going to say 9.55 coming in to next week. All right, the next closest was our guest. He's not here, so we'll give it to, Russell was crazy off, so we'll give it to the Mr. Rock Lobster. What are you feeling this time next week, sir?
Friday we got decay, so I'm going to say $9.99.
Little price is right, a little higher. I can go for that. That's not bad. I could see that 9.99. And Mr. Rhodes picking up the rear here. 20 handle, 30 handle. What are you going for?
I'm going for $8.95.
Okay, I was in the middle of a drink there, and I almost spit it on my computer. What are you doing to me?
Yes, you did. I'm going $8.95. I give up. I'm throwing in the towel.
Almost did a spit take.
Dude, I'm going position limit long VIX.
I know. Hold the horses. Let's end this show so I could just go crazy. Buy all the calls. Buy them in VIX land. It's happened. They've finally broken Russell.
I give up.
They have finally broken Russell, listeners. 8.95. Mark this day in your calendars.
It's at least buy a one lot, everybody. It's like a lotto ticket.
For it is historic. Mr. Rhodes has broken. And with that moment, I think we need to bring this show to an end before Mr. Rhodes goes even crazier. But before we do that, one last time around the horn, see what's cooking with everybody. Let's start with he of the man cave. Maybe his man cave finally broke him. Mr. Rhodes, things are cooking on the blogs and elsewhere. You got RMCs coming up. What's cooking in the land of CBOE this week, sir?
Next week, we are hosting the FMA, the Financial Management Association, which is an academic group. The FMA Conference on Derivatives and Volatility. It's a day and a half day Thursday, all day Friday. 6 very deep academic papers. We'll have, I think there are even going to be a couple Nobel Prize winners floating around, not presenting, but just kind of hanging out. A lot of University of Chicago people come up for that. So that's what I've got on the horizon. And I got to speak to these people for an hour. I got to come up with something to talk about.
And that's at the CBOE, right?
That's at the CBOE. Oh, yeah. Yeah.
There you go. Check it out, listeners. If you want to check it out, or I guess you can't really check it out, but if you, maybe Mr. Rhodes will break it down for us on the show in the near future. And of course, Mr. Greasy Meatball / Rock Lobster. I can get it right one of these days. What's cooking in the land of the pit?
Look for our Easy VIXes coming mid-November. Mark is sending out a teaser. I believe his book comes out. And I launch the Option Pit Volatility newsletter, basically teaching people how to trade VIX versus your short premium. That newsletter will start. It's been already running for a while, but that will come out mid-November as well after we do our Easy VIX, teaching you how to use the VIX the right way.
There you go. Or as we said yesterday, how to lose money much more slowly, I think we said yesterday on the show, as opposed to the quick way some people were sending us yesterday. I think they were talking about doing net small debit, net short units, 1x2s in Bitcoin calls, buy one, sell two. You can pretty much imagine how quickly you would lose money using that scenario. Speaking of which, if that fascinates you, talking about Bitcoin options, or perhaps the lack thereof, or all we're talking about here on this show, including Skew and a lot of different products, maybe the indices, definitely WTI. I know CME was tweeting out what we want to talk about, and you guys are hitting us up for WTI and gold and a bunch of other stuff, so we'll get into all the commodity vol and Skew and your questions, and probably a lot of Bitcoin too, a lot of write-ins for Bitcoin in just a little bit, in about 25 minutes, or if you're in the chat, stay there. We'll play some shows for you in the interim. Come back at about 1:30. We'll be talking all things TWIFO, and if you can't join us, if you're listening after the fact, then we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.